Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Friday, the 22nd of June, 2007, and we had selling once again on Wall Street today. The Spider closed with a loss of $1.66, or just over 1.1%. And still, I'm thinking that, this morning I wrote volatility peaks at turning points. That's just one of George Soros's many great quotes. But it may or may not be a turning point. Again, we'll only know in hindsight. But the fact is that we can consider this market neutral right now. And when I consider a market neutral, I think it means you've got to be extra defensive. You've got to make sure that you cut down on your share size. You be sure to honor your stops. And listen to the message of the market. The message of the market is mixed right now. We've got a intermediate term trend, the blue line, the 20-day moving average. It looks like it's starting to turn lower a little bit, as is the 10-day moving average. But we've still got this rising 50-day moving average. Now we can get breaks with a rising 50-day moving average. The important level right now is going to continue to be these lows right here at about 148. Let's see what that number actually was. That low was 140. Was it 149? I guess it was 149. 149.10. I don't know why I got confused there. But anyways, 149.10. 149.10 or so. But I think we got to give it a little bit lower than that. Very similar to the way I had said a couple weeks ago on the semiconductors that everyone was watching this 36 level. Let's give it a little bit of safety for a shakeout down to about 35.5. And we saw from that failed break below that 36 level came a fast move higher. Let's go back to the S&P 500, and right now what we see in here is that, again, we had volatility. We're seeing bigger volume in here, and one thing that concerns me is just that there's so much bearishness out there. There's a lot of people that seem to be calling for the top here. Now, when we look at this 30-minute chart objectively, you can make a case in here that this is a head and shoulders top, and that just adds more significance to that 149 level or so. So it's just time to be very careful in here. Make sure you're cutting back, taking some profits, tightening stops, smaller share size. And like I said this morning, it's really a good environment to be trading long and short. It's a great environment for day trading. Right now, markets don't typically just go straight up and then fall down. They distribute for a while and then they break. And again, that rising 50-day moving average, we want to give the benefit of the doubt to the buyers. It's not a trading method. It's not a trading system, that is. If it breaks below here and stays below that 149 level for more than a day or so, then this market could be in for bigger trouble. We have seen on this weekly time frame that the market stalled out. But again, stalling out doesn't mean it's going to go lower. It could just be pausing before the next rally, or it could be distributing before a decline. Nobody knows that answer. And you can look at all the oscillators and indicators, but the fact is we do have a lower high, and breaking below here would be a lower low. They would get a knee-jerk sell-off reaction, but it would be the subsequent action to a breakdown. That is, will it stay below that level, or will it quickly recover? Because if it breaks down and quickly recovers, then we could squeeze those shorts real strong. And because, again, we've got a rising 50-day moving average, I want to give the benefit of the doubt to the buyers. But again, on the 10-minute time frame, what do we have in here? On the 10-minute time frame, we've got a declining 5-day moving average, and that tells us that the intermediate term trend is still lower. So we want to be very cautious. We've got mixed messages from the market right in here. So that's the way you've got to look at it. We've got mixed messages. The Nasdaq has been stronger. It looked like it was recovering yesterday, got back above that 5-day moving average. Now it's back below the 5-day moving average. It's back down to the 47.20 area being tested as support too. But now we've got a declining 5-day moving average, so that means you want to be extra cautious in here as well. On the daily time frame, that 10 and 20-day moving average continue to hold up in here, and we've got a rising 50-day moving average. Realistically, you look at this, we're still in a great bull market in the Nasdaq 100. It's not going to just change overnight. A lot of people look for it to do that, but breaking below, I think next week, below 47.10, 47.20, and staying there below there for an hour or so could lead to a little panicky move that would equal to probably the height of this, which is, let's just call that 48 up there and 47.20. So take 80 cents off of that, and that would give us a move down towards about 46.40, which is where we had some prior support. So perhaps we're heading down towards that level, but let's wait and see. We do want to be extra cautious because we've got that declining 5-day moving average. Now, the semiconductors have been where the real strength in this market has been since that shakeout down here below the $36 level. You can see that it's testing this uptrend line, and breaking an uptrend line doesn't mean it's automatically going to reverse, as I always point out, but it does mean that maybe it's due for a correction sideways. Now, one thing that could be potentially troublesome is the fact that it broke out yesterday, and a lot of shorts covered and got new longs involved in there. From failed moves come fast moves. So I think now we've got to be very cautious on the semiconductors. Below 37.70 or so, that would indicate that this move may have failed. It's still way too early to call that. It's just something that we want to be aware of. I think you want to be a little bit more defensive in the semiconductors now. Yesterday I thought it looked really strong because we've got this 10, 20, and 50-day moving average all heading higher, and we had a fresh breakout, but that breakout has now failed, so now we've got to look at that move very suspiciously. It doesn't mean it's failed yet, but unless it can recover quickly, there might be further selling to come in these semiconductors, and it will catch a lot of people off guard because a lot of the shorts have already covered, a lot of the people chased it to the long side. Now you could get a long squeeze, basically. The longs could be trapped up in there. Again, that's all theoretical. Right now, let's keep our focus on about 37.60, 37.70, or in that area. That's going to be an important level to watch. IWM, again, continues to be neutral in here. This is just a range-bound market. It's in the middle of the range once again. It's back below the 83. I'm going to quit talking about that $83 level. I'm sick of talking about the $83 level because I don't. It's give or take 50 cents that really seems to be what this market's been focusing around. But again, here we've got a declining 5-day moving average. That means be very cautious, at least until that moving average flattens out and the market turns back up above it like we had over here. That's when you want to get long. No one can pick the bottom. No one can tell you where the bottom will be. Maybe we get another shakeout similar to this last move. This last move, we have this could equal to that. This low right here could equal to where we are right now, and then this little recovery. Maybe Monday we get a shakeout down below there, and then another recovery. No one knows for sure. It's just something to be aware of. Overall, though, these markets, it's time to be defensive. If you're an investor, you ought to be cutting back on your positions. Investors, investors cut back on your positions. Take some profits in here. The market's sending us a mixed message. But if you're a short-term aggressive trader, there's a lot of great opportunities. Volatility's picking up in here, and it's really a good time to be day trading.